Welcome to Charts Today. My name is David Linton, and today's edition for Friday the 3rd of March comes to you from London. And we start by looking at currencies, then stock markets, commodities, and last of all, look at some tech stocks. And I think the really big thing at the moment is this dollar rise. We see here how we're now just breaking this 102 level, really gaining strength here. Upside targets 103.84, 104.16, so there's upside potential of around 2%. And this target given way back in November still there of 104.89. So we are, and that's 2.7%. So we are seeing potential for the dollar to make new highs. And of course, new highs are good. As technical analysts, we like that. Look at the way we found support on the cloud with the lagging line. We really are motoring, and it looks like the dollar will break new highs. And these upside targets are very substantial. That conversely shows the euro reaching new lows. Lots of new downside targets here: 104, 102, 104, and so it's really quite key here that we are just seeing that euro weakness kicking in. Bearish, bearish, bearish. Remember, this is my long term, my medium term, and my short term. So really quite significant. Japanese yen, we see here, it's bullish above the cloud, and on the short term and medium term, not quite through yet on the long term. But as we've said in previous sessions, if we go higher than this high set in December, that will activate a new upside target of 40% upside. So really significant moves there potentially on the dollar. Sterling is weakening further this morning. We're at 122.58, and really that's just in line with what we have come to expect. We see here again the lagging line finding resistance on the cloud. Downside targets 117.70, 121.16. So we are seeing significant downside pressure on sterling today, and a bad end to the week for the pound. And then if we look at sterling against the euro, we see it falling here as well. So euro strength versus, well, sterling weakness is greater than euro weakness, if you like. And then we look at the Swiss franc. We see again we're falling away at about 124.25 at the moment. So sterling just weakening all around. The one place where we've seen a little bit of strength is against the Australian dollar. So Australian dollar just suggests that that's weakening there. So interesting though that we still do have these downside targets. Looking at stock markets, we start with the S&P 500. We see here we did pull back last night, so we did have a little bit of a reversal. We just pulled back on the 60-minute chart, but really nothing untoward here. We've still got these upside targets of 2.7 and 3%. And taking a look at the Nasdaq, we see here again we're pulled back a little bit, but still making new highs. And the Dow again pulled back a little bit yesterday, but amazing run in the Dow Jones Index, and the Russell 2000 also just holding on above the cloud as well. Futures are down a bit today, so we are seeing about 2/3% on both the S&P and the Nasdaq future. So it does suggest the US market might have just a less strong end to the week. And the FTSE 100 we're seeing here is just pulling back again as well. So this morning we're just pulling back slightly, and if we look at the FTSE 250, we are as well, but the uptrends are still very much intact. The DAX still bullish on all three charts as well, although we're pulling back again. The Nikkei, with that stronger dollar, weaker yen, is still powering ahead. And if we look at the Hang Seng, it has actually just got some short-term weakness below the cloud, so we are just seeing that market pulling back, as is China down 0.5%, but still holding on to its short-term uptrend. We look at the Sensex. We see here that we are holding on to the bullish short-term trend as well. Australian market is up, presumably on a weaker Australian dollar. So we are seeing just as much as we're just below the cloud, we are seeing these upside targets still there, very much there. Brent crude down nearly 1%, just can't get above this out of this range. 57.50 is the struggling point. We're just not managing to make it. So crude just not doing what it would normally do at this time of year, as is WTI back below the cloud as well. And we're seeing US nat gas just hanging on around this 280 level, but only just. Going straight to gold, we see a really big, strong pullback in gold. We still do have this upside target in place. That would be negated below 12.20. Not a long way away from there at the moment. 12.18 probably would negate that target. But at the moment, It's just a pullback to support, but that is probably an effect of the stronger dollar as well. And if we look at silver, we see that's really sold off very dramatically yesterday as well, giving a new downside target of 6%. So the strong dollar is having a big impact in a lot of places. And if we look at the US government yields, we're just hovering at this 250 level, 2.48% on the 10-year yield. So just again, markets pricing in higher rates. Apple still booming. Pulled back a little bit at the end of yesterday's session, but still looking pretty strong. As is Google, as is Amazon. Facebook just really nudging these new highs all the time, so that's looking pretty positive. Microsoft did pull back quite significantly yesterday, and Nvidia Corp has pulled back to below this 99 level, so that's quite key that we have pulled back there on the chart. So I'm quite pleased I sold those this week. So that's it for today. Have a great weekend. Until next Monday in London, happy charting. See you then.